Hey, how's it going, everybody? Expat Stacker. Got a new setup because I moved recently, but it's a work in progress. But just cutting right to the chase, there's been a lot going on in the world of finance, and I gotta say, the recent turmoil in the U.S. banking system, I think, is 100% caused by the Federal Reserve's policy because all of the problems that have been occurring in the banking sector, it all kind of stems down to the interest rates. And the Fed just delivered its 10th consecutive rate hike today, and we're already seeing more fallout from that with PacWest Banking Corp and other regional banks. uh, PacWest's share price has been like crushed in like by like half, even before trading. And that's just a direct result of the Fed. And they keep on saying that, oh, it's almost over. It's, yeah, the banking thing it's going to be okay. And we're going to stop cutting rates soon, hiking rates soon and whatever. But even today, they haven't definitively said, like, okay, we're done. We're going to stop. We're going to see. They said we'll start to think about it now. And everybody knows, SVB, Silicon Valley Bank, they collapsed because their assets were too heavily caught up in bonds. And as the interest rate hikes continued, that, kind of lowered the value of the short-term value of those bonds. And when they needed to get, more cash to cover the uh, withdrawals from their deposits that exceeded the FDIC insurance, they went to sell the bonds, but since they were lower in value than when they bought them, that they couldn't stay above water. And then of course Signature Bank collapsed, and then we had First Republic Bank collapse, and JP Morgan actually bought them. Now, JP Morgan buying First Republic Bank, actually, this is starting to get to the heart of the issue why I want to make this video. JP Morgan acquiring First Republic actually violates a U.S. law that states that a bank that represents 10% or more of all deposits in the U.S. cannot acquire another bank. And this was established after 2008 when there were banks that were too big to fail. But that just went ahead, didn't stop them at all from acquiring First Republic. So there you go. There's sign number one that they don't have to play by the same rules as us. They make rules and then they break rules. So J.P. Morgan is the largest bank, and they definitely represent way more than 10% of U.S. deposits, but they were still allowed to acquire another fairly large size bank, First Republic, who also, by the way, their portfolio is tied up in mortgages, which are affected by what? Interest rates. So there you go. It's the Fed. So, but not only that, not only does JP Morgan get to acquire a bank that they're not supposed to be allowed to under the U.S. law, but they're being helped by the FDIC. FDIC is helping JPM purchase First Republic, and on top of that, JP Morgan is not going to receive any of First Republic's liabilities, and it's going to get to keep 100% of the profits from First Republic, which, like I said, those are not like toxic assets like what happened back in 2008. These are, a lot of good assets that First Republic had. So JP Morgan just getting bigger and stronger. And this is not just limited to the U.S. I mean, you probably all saw that Credit Suisse was taken over by UBS, and I see today also that even some Canadian banks are starting to get in trouble as well. So, and it's not just like big players that are getting hurt by this. Lots of depositors and shareholders are losing out in all of these cases. They aren't covered. the FDIC has limits on what they cover in terms of deposits. Foreign shareholders aren't getting anything back. And I mean, that includes like institutional investors like sovereign wealth funds and things like this. And people who hold preferred shares of bank stocks, like First Republic, for example, they don't get anything back in return either. They just lose out. Now, the Fed claims to be doing all this rate hiking to quote unquote fight inflation. But if you look at corporate earnings, they're taking home record profits basically across the board with a few exceptions. But especially in energy and a few other industries, retail, other industries, record profits, record bonuses for the executives, and they're doing nothing to compress their margins. And meanwhile, working people in America still haven't gotten a raise since July 2009. So, and meanwhile, while all this is going on April 17th, the Republican Speaker of the House, Kevin McCarthy, and by the way, I'm not picking on Republicans, stick around because I got some fire for the other side too, but what you're going to really realize is that there are no two sides. But anyways, Kevin McCarthy gave a speech on the floor of the New York Stock Exchange and said that there will be no new taxes. They're not going to raise taxes at all. So basically standing on the floor of the rich people's playground while working people haven't gotten a raise since 2009 and said, no, don't worry, we're not gonna raise your taxes, even though they had tax cuts, under Trump and under Bush and Obama made their tax cuts permanent, but no, we can't give a raise to the working class people, and we got to make sure that rich people who are making more and more and more get to basically keep it all. No new taxes for them. So, okay, so there's that, right? Democrats and Republicans are now also fighting over the debt ceiling. So while they're saying they're not going to raise new taxes, they're saying that they have to cut spending programs for working people. And so we don't get no raise. They're taking away what little programs people have, and no new taxes or anything like that. Meanwhile, the banks are getting to break rules, get bigger, get stronger. But worse than government officials saying that they're not gonna, do anything to help with the widening wealth and income inequality, worse than that, the government is actually complicit and involved in the corruption that we find ourselves in today. So let me give you an example. Florida Democrat Lois Frankel revealed that she dumped First Republic Bank stock just prior to its collapse and purchased JP Morgan just before JP Morgan purchased First Republic. And when JP Morgan did purchase First Republic, JP Morgan's stock price skyrocketed. So according to financial disclosures reported, Frankel on April 28th sold First Republic stock. On March 16th she sold that stock and then bought JP Morgan stock on March 22nd. So wow, how lucky of her. So obviously this is corruption. And when she was asked about it, she said, "Oh, my account is managed independently by a money manager who buys and sells stocks at his discretion. I don't know anything what's going on here," right? And she's not being investigated at all. And we've seen this time and time and time and time again. Nancy Pelosi, right before Microsoft got a huge, $1 billion worth of government contracts with the Department of Defense, she buys millions of shares, millions of dollars worth of shares. During COVID, after the sales in February, Senator Richard Burr sold $1.7 million worth of stocks, and so did other senators around him. And he was privy to information about COVID before the rest of us were. and basically him and 3 other senators sold basically all their major holdings around the time. And then when the stocks plummeted, they came in, bought them back, and then rode the wave back up. I don't want to be conspiratorial here, but it's pretty obvious what's going on. At this point, it feels like what the Fed is doing is deliberate. Like smaller banks are being intentionally wiped out to concentrate and consolidate wealth and power into fewer and fewer hands. And we can see where that leads by just looking at the people who are at the top of the banks and at the top of the government. And whether you believe it's intentional or not, it doesn't really matter. That's what's going on. And I mean, I just provided examples of individuals and laws that are being violated and what's causing all of this and who's suffering and who's benefiting. With all this rapacious greed and lawlessness, I just ask you one thing. Who's looking out for you? Because it ain't the people who work at the banks. Even the banks that went under, all of their executives and you know, top level people, they all got bonus after bonus after bonus after bonus, and they're going to be fine. They're going to go either work as a lobbyist or go work for another bank. All I can say is I'm a working class guy, and I do believe in having a, you know, diversity in your assets, in your financial assets. I hold stocks. I have cryptocurrencies. You know, I have some real estate investments, but all of those things are, maybe with the exception of the real estate, but even that, I mean, it's really tied to a lot of risk with other people who are in control and who make up rules and then break them and leave you stuck with the bag while they run away with the cash. So all I can tell you is I really hope that you guys have been and continue to stack. And if you're new to it, I really strongly suggest that you get into gold and silver, because I'll be damned if I work day in and day out as hard as I do to let these suckers, you know, make it quote unquote legal to rob us all and run away with our life savings. I mean, they're selling stocks that is going to take you and me our whole entire working career to build up a portfolio of that size, and they just sell it in one day because they have insider information. If you and I did that, we'd be in prison, but they get away with it. They can't do that with this, and that's why I stack this stuff. If you look at my previous videos, I talk about this is for my family, and that's why I do this. And this is just a prime example of what's going on. And so I continue to stack, and I urge you guys to either start or continue to do it yourself. I just gave you a very compelling case as to why. You let me know what you think is going on and what you think is going to happen. And by the way, before I end the video, I want to say this. A lot of people are talking about how, you know, the US dollar is on its last leg and it's going to crash and blah, blah, blah. Who knows? I can't predict the future, but if I had to, I would say it's like this. It's not going to be a sudden overnight collapse that just all of a sudden happens. It's going to be like a slow thing that happens over kind of a long period of time. If the U.S. defaults on its debt, that's going to be a huge, blow to the U.S. dollar's supremacy around the world. And, I mean, that could be the beginning of the end of that. We also have, in August, we're going to get an update on the BRICS nations, which is Brazil, Russia, India, China, and South Africa. They're, I guess, considering at this point launching a gold-backed currency. We saw that in Zimbabwe they did that, a country which, you know, has kind of been like the joke of the world and has had runaway inflation forever. There's a lot of things going on right now, man, but I just wanted to say, I don't think that the U.S. dollar is going to collapse overnight. I think it will be like a slow, gradual fall. If you look at how the U.S. dollar came to be, number one, it took over, you know, the British pounds, and that was also a gradual process. I'm not saying that just because it happened in the past, that's the way it's going to happen again, but that's kind of how I see it playing out, you know. usually as something as big and complex and entrenched and historical and powerful as like a country and a currency, it doesn't collapse just overnight. I mean, you can also see this with the Romans and how they debased and devalued their currency. It didn't happen overnight, and there were ebbs and flows. Like, people tried to bring back precious metals into the fold and stop debasing the currency, and they had other currencies as well. I mean, they used to use salt coins back in the day. Now we have other things as well, like cryptocurrencies. So this is a lot of analogies that you could draw, but I don't think it's going to be this massive collapse that happens overnight. But if it is, if I'm wrong about that, guess what? That's also where this comes into play. So do you trust FDIC insurance, or do you trust GOLD insurance? And also maybe a little bit of this. Tell me in the comment section. Expat Stacker, much love and respect.